What's up YouTube, it's Louis here. I hope you're all well. Today we're looking at Quant on the 4-hour time frame even, and I just want to say thank you to Monica. Really appreciate it from the bottom of my heart. It was amazing to see that comment. Now it was only a thank you, but she donated a super thanks to the channel, my first ever super thanks, so it's definitely one that I will definitely remember for the rest of my life. Thank you so much, Monica, and it'd be amazing if I've made you money or if I've saved you money. If you want to give back to the channel, we have the membership options that you can join, different perks for different levels. And if you just want to give back to the channel and say thank you, yeah, the super thanks is below by the like button. Of course, don't forget to like. Let's get the Quant videos to the top of the search results by liking, by subscribing, and of course commenting. That's what really helps the channel the most, the comments. And of course, since the other week where we gained 500 subscribers and lost 500 subscribers, YouTube didn't give me any clear answers apart from it's common, guys. So, and actually since then, I called it, the algorithm has really been damaged. We've been posting non-stop since then, but not gaining any subscribers, actually losing subscribers since they took away the 500. So we're at 2.5k, went to 3k, went back to 2.5k, and last few days we've actually been losing subscribers, and I knew this was going to damage my algorithm. So I'd be really appreciative, of course, if you could get those super thanks in, only if you can. But yeah, main thing, please like the video and comment. That's what really helps out the channel, guys. So thank you so much for the support of these last few months, and hopefully we can get this ball run not just back for me but back for you guys, because I know a lot of you were deeply invested in and around the top for Quant. And yeah, since losing that $150 psychological level, it's all completely changed. And yeah, every single pump into it, there was the potential of obviously continuing higher, but I always made you all aware when we were here and here that we were not above this neckline of this head and shoulders, but also the psychological level. So there was no reason for us to get overexcited. Yes, we had amazing pumps. I hope you took profits along these pumps, because at the top on both occasions I was saying yes, we do have targets to the upside if we break above it, if we can stay above it. But if we can't stay above 150, and I was actually saying if we can get above 165, that is when we can start to get excited. Without getting above 165, like steering us clear from this downward trajectory, then yeah, until that happens, we can't say that we're not forecasting this further downside, because we did have a target back here from December, which was $70, and we knew down here we didn't meet it. I was getting trolled. Down here we didn't meet it, I was getting trolled, and eventually we met it. And on the way down, once we did eventually top out here, I could tell that this was the actual high and not this one. So I measured the fibs from this low to this high, just as I did with this Fibonacci from here to here, and that's why I gave you the $70 target. The larger fib, 1618. So if we just get rid of the smaller one, you can see the larger, the 1 being here, the 0 being here, you can see 0, and yeah, your 1618 was $70. We also had a 2 at 53. And of course, we were always prepared for these lower targets if they are to still come, because potentially they can. I'm not going to go and say yes, 100% they are going to happen, because there's certain criteria that are involved. So we'll get back that other Fibonacci retracement. I'll just drag it to the side here, and you can see after hitting this 1618 target at $55, we are getting this bounce as we called. And it's all about, yeah, starting to climb back up and hold the Fibonacci level. So get above the 1618, which we did, and we got above the 1.272, but we couldn't find support on it. We found support on the level below, the 1414, where we had this bounce, but this bounce was a lower high. So technically, it should continue lower, guys. So if I measure from the high to the low, you can see run into the 618, you got above it, went below it, got above it, went below. This is your dead cat bounce scenario. But I don't really like using that terminology, guys, because when I say dead cat bounce, a lot of you are thinking, oh, the top of the bull market. But in actual fact, guys, it's just a fib retracement. All it is a push to the downside, an exhaustion phase back up, failing to reclaim the 618 and breaking the 1 fib level. If you fail to do that, then we're going to roll over, and that's what we're seeing. This is why we put a trade on Bitcoin, and go watch that video. Unfortunately, the trade did not hit stop loss, but we closed it before stop loss, and if we just didn't, we'd be over 35% in profit. So very annoying, but it's happened to me hundreds of times before. It's going to happen to me 100 times again, and that's just the part of trading, guys. It's just the reality. And yeah, obviously even me here 3 years into it still make the mistakes. Like, you're never gonna get away from it. Trust me, guys. If you appreciate all the info that I give you every day on the channel, all this free value, because I give it out to you guys for free, because I know most of you are not going to take up on this information, all this free value. I do it because I want you guys to know that I am legit. And if you did want to, and you don't have to, but if you did want to take action on the mentorship or even on the course, there are spaces there. I want to make over 1,000 people into self-sufficient traders, and so far I'm over 30 students in. Let's get to 1,000. I hope that many of you find joy in my course or the mentorship, and that you can all become self-sufficient traders, even if it's just from the knowledge in the videos already. But there you go. That's why I want to share it to you all, guys, because 99% of you won't listen anyway. But yeah, what is going on actually right now? Well, we've just shown you that fib retracement, how we've had that dead cat bounce scenario. So technically we should be coming down and losing this low, and of course if we are losing this low, you can see it's some sort of M pattern. Everyone's probably focused right now on this double bottom, and I see it as well, but you also need to see at the same time this potential M pattern, because we can't stay biased. Of course, if you break this neckline, you validate a double bottom. Hold it, you're going up. But if we now come down and lose this support, you're validating this M pattern. Okay, so yeah, very technical, but it's as simple as that. So now we'll put the fibs from here to here, because you know all we're doing is measuring impulses and seeing if it's retracing, holding the 618 to continue the trend it's already in. So here we have this impulse, we measured it, this was the 618, and then it looks like we're starting to do what it should. You know, you've had this impulse, you've retraced before continuation. So now we are actually coming down. I have to do that again the opposite way. I need to measure this impulse to see where is it retracing to. Is it going to hold the 618 to continue the trend it was in? Because we had this push, you exhausted the 618 before continuation. However, you can see we actually lost the 618, and this is the start of a reverse wave unless we reclaim the 618. And you actually did that with this 4-hour candle. This is a bullish hammer. I would like to see larger wicks like this, but it's fine. It's still a buy signal, at least in the short term. What we can't forget though, guys, is that we're in a downtrend, and any buy signal, any bullish pattern, yeah, it may work in the short term, but I can guarantee it won't work in the long term. You need to, because we're in a downtrend, any bullish patterns should fail eventually. So that's why you see here we've had this massive pump. Okay, first step. We can't say this is the complete bottom. This is the first step of getting out of here. Okay, but remember, if we're losing this, you have a target down at the 1618. You've got some even better confidence a little bit above, in around 55, 57. Does it mean we're not coming to the 1618? No, but you can see that you could hold this with the bodies, but maybe spike below. But let's say we just lose this support. Let's say we lose this one and we lose this. Yeah, technically we'd go to the 1618. That would be a target anyway once you lose $61. But I just want to make you guys aware there is confluence above that 1618. Actually, on the previous larger one with this spike from 111 to 235, that's that larger 1618 over here, and that's lining up with the 1414 out of this new Fibonacci retracement that we've measured. So again, if we lose $61, and yesterday, remember we were saying we were correcting up before a dump. We made the video on this candle and we actually did dump. So now we have, and we lost the 618. Of course, you've created the reverse wave, so it should go to the 1 unless you reclaim the 618 and can obviously get above these EMAs and break this high. Break that high, you're validating that W pattern. Let's get you that target. I also get you the target out of the M pattern. So from there, back to the low. Once you break above that right there, you can see your target. I know the target's a bit above the 200. I'll just say wherever the 200 lands when you're breaking out, that's going to be a target. I wouldn't worry too much about this line. Wherever the 200 EMA is, if you do break out, I'm not saying this is bullish, because again, this is not valid until you break the neckline, until you're above. So you need to get above $75 if you want to go to 88. If you're not above 75, you're not going to 88. Simple as that. Now we'll prepare for the other scenario down here. From the top to the bottom, literally the same target. You just move it from there to there. And then you can see now you've got some confidence in around the 1618. But don't forget, we've got that big level here. So in actual fact, guys, I could, if I wanted, just draw a big box between the 1.272 from 57 down until 53. We don't really want to lose this. I'll make this green at the moment. Of course, if we're losing it, then we are making this lower low. We are going to continue down to this $43 target. And then if that's not holding, which it should, because it's a very nice wick, but it's not the strongest. You can see it's even the resistance of this area over here. So could be strong, but yeah, there is a level below. You can see here in around the $35 area, lining up with these other two targets down here. And that's only going to happen if you validate this M. You need to meet the target. Usually, guys, when you meet the target, you usually form a pattern in the opposite direction. And you can see our pattern is actually going to be higher than this low. So if you could do that, even if it looks bearish, technically you could still be creating some sort of higher low and eventually make a higher high. That would be lovely, wouldn't it? So you have a low, you have a high, you have a higher low, and a higher high. That is if we just stop at the pattern's target. Of course, it can continue because we know if the momentum is strong enough to push us below the 1618, where are your next target? The two targets. After that, we do get a bounce. This bounce does not mean we're going to flip the trend and go up. If you want to flip the trend, let's say we do actually meet $43 to $45, well, we would need and we would get this relief rally. However, with this relief rally, if we do not want to go down even further, so let's say we do dump all the way down to here. If you don't want to dump even further down to these lower 30s, then what we need to do after meeting the two targets, come all the way back up to $61 and reclaim that level. And if so, this is where we're going to start the journey. Break above this double bottoms neckline. You validate that again. Go to the 200 EMA, wherever that is at that time. But yeah, that is if we don't want to go down. So that's getting above the 1 fib level. But of course, any pump, I'm not saying you have to even pump to the 1. It's just if you want to not see any further downside, you need to get above the 1. But yeah, you could just pump up into here and continue. You could pump up even higher and continue. You could pump all the way to the 1 and continue down. Oh, a voice crack. Jeez, guys. But yeah, if you enjoyed today's update, please smash the like button. Of course, subscribe, because yeah, we keep losing subscribers, unfortunately, since that massive spike. And yeah, please comment so we can get to the top of the quant search results. And if you want to give a super thanks and support the channel, it would be so appreciated, and it's really motivating. And of course, I will shout you guys out. And please check the memberships, because yeah, there's some exclusive stuff in those packages. Thank you guys. I'll catch you in the next one. And as always, peace. And here are the crypto packages. Here is how to get started. Click the link to my Twitter, head over to the pinned post, and all you need to do is message under and just type, hey, Louis, I'm interested in the mentorship. And that's A-okay. Perfect, guys. I'll catch you in the next one. Leave a like, subscribe, and comment. Peace.